just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith. Good evening, folks. It is a premiere, but it's a-okay because it's my grandma's birthday, so I must spend time with her. So I wanted to do something before I hung out with her. So, make sure you guys say happy birthday and everything. But today we have a special guest. Actually, it's funny because if anyone knows, I've been doing Black Moms Connection for a couple of years since 2018, and we moved into the pandemic and doing it virtual, but I never was able to see any of the people that came true weeks after me. But I decided to link up with one of the lovely speakers or expertise, and I just want to welcome y'all, Ted. Welcome, Ted.
Yes.
Welcome.
I'm loving it. About time.
Right?
About time.
Because we've been doing Black Moms Connection for how long?
Yes. You started for a little before me. You started in 2018.
Yes,
I
but like in person,
in
and then they
person.
had the virtual.
All right. So, well, I started in 2020. And right, so
Okay.
they connected me out there, and then they contacted me and
Yes.
said, "Yes, I've been a mortgage agent for 21 years," and said, "Yeah, need someone to speak about credit."
Yes.
I got you.
Boom,
Enough
bam,
said.
bam.
That's easy, right? So, I've been using credit for all my life, so
So who
so
is
I
not the perfect person to talk about it but
that's right.
you?
That's right. And then meeting you, and it's like, just like you say, you see all these speakers, but you don't get a chance to see them. So I'm
Yeah.
so glad that we connected, had some conversations, and I start following your Instagram page, and I say, okay, this lady's doing some great things, and
I
now we're
know.
here to have a conversation as well. So I'm loving
Exactly.
it. Beautiful.
And I guess we have to also big up Dr. Vibe because you were usually in his chats on Mondays and Fridays talk
Yes.
about that. And I know there's a secret, so I can't talk about that secret.
Just a little secret. Just a little secret.
But I definitely want the folks to know who Ted is. I'll tell them the people
Yes,
them.
yes. Well, listen, I'm just like anyone else, I'm a human being first, okay?
Yes,
A human
true,
being
true.
first. But I am definitely a man, a
Mhm.
family man, a father, and just trying to help people not make the mistakes I've made, and imparting on the knowledge I know from being an expert in the field,
Yeah.
as well as, navigating through this life. Um,
Mhm.
I come from a generation of Jamaicans, so I'm actually born here in Canada, but I have
Okay.
9 siblings that are Jamaican. I'm the youngest one. I'm the
Big up
youngest
to the
one.
young ones.
Trust me.
I'm the
So,
youngest too.
but I got the best of both worlds though, because I call myself a can jam. You understand? So all my family is Jamaican. So I go to Jamaica every year, if not twice a year, sometimes go see my
Yes.
family. So
Yes.
sometimes when people meet me first, hold on, it's like, which part of Jamaica are you from? Well, not
Mhm.
from Jamaica, from Canada. I big it up
No,
same way.
I
Big it up
like
same
that one.
way.
I'm gonna use that one.
Can
Can
jam.
jam.
I can jam, man. I can jam. You understand? So that's what I tell people. But I came from them and hardworking people.
Yeah.
Lost my father when I was 19
Mm.
years old. That
Condolences.
was devastating. Thank you very much. It's been some time. I got a little
Mhm.
crazy. It's been some time. So, but
Little salt and pepper.
salt and pepper. But that shook up my world. Because I always been a hardworking man. Like my
Yeah.
father, I owned my own car when I was 16 years old. I started working at
Mm.
14, bought a car at 16 with the help of my father, telling me how to save money.
Mhm.
Um, and then I had a wrestling scholarship out in British Columbia. And when my father passed away, it just changed my world. I
Jeez.
I had to become I call it a financial husband to my mother. So I had to
Mm.
come home from British Columbia because even though it was a wrestling scholarship, it was just for
Yeah.
tuition. I had to pay for room and board, food, and all those kind of things there. So it's like at 19 years old, I was living single, right? But where's the money coming from?
Jeez.
So I came back home, financial husband to my mom.
Hmm.
Fast track about 7 years from there, my mom had
Yeah.
Alzheimer's. Now, both incidents now, my parents had no insurance in place. So when mom had Alzheimer's now, me and my
Mm.
siblings had to step in and pay for her
And
care.
help.
Yeah, that's tough. You know, fast forward there, get
Yeah.
married, family business. So,
Mm.
once again, we're talking about credit here. So I want to say you have to know how to use your credit because you have to buy a house, got get
Mhm.
car, all those kind of things
Mm.
there. So life is just life. That's what I'm saying. First off, I'm human. I'm a man like
Hey.
everyone else. Right. So let's
Mhm.
just get that out of the way. Like, even though you're the finance coach and all that stuff, we're still
Yeah.
human, you know, and we're here to learn from each other. And I'm excited about this, which brings it today now, because now let's go back to being a husband. I got laid
Mhm.
off while I was
Mm.
buying my house. I got laid off. The house didn't close yet.
Oh,
Think about that. So,
golly.
but the mortgage process that they have to confirm
Yes.
income, but I don't have no income. So,
Talk
luckily
about
though,
stress.
right?
I'm stressed for you right now, just
Trust me,
hearing
man.
it.
Trust
Oh
me.
my
It
God.
was tough, but it was a
Yeah.
blessing. It was a blessing. I'm gonna
Okay.
tell you why it's a blessing. A friend of mine helped me get the mortgage
Mm.
before I actually got laid off. So I actually started doing mortgage broking part time.
Yes.
I didn't close no deals though because it's hard to speak to people in the evenings and you can't speak to banks during the daytime.
Exactly.
However, I had my license.
Hmm.
So when I got laid off, I got laid off on good terms. It was a restructuring thing. I was one of the higher income earners there, so there's no
Okay.
union. So they let go of me. If they could get someone, making doing the same job I'm doing, but
Yes.
60% less, or not 60%, 60% of the income I'm earning.
Correct.
So they confirmed my income, even though I wasn't working there. So my deal closed. You understand? Wink, wink. You understand?
Thank
you know?
heavens. So
So
wait, so between that period, how long? Between getting laid off and getting it closed?
good question. So I got laid off. I got my insurance. I got my mortgage license in May of
Yes.
2003, since 2003. See it,
Yes,
Les?
it
2003.
is.
Yes, I almost forgot, but it's right there.
Yeah.
Since 2003. And
Yes.
I got laid off in October, and my
Yes.
house closed in December. So what I had to do is pull some money back from my down payment so I could
Yeah.
hold on for like a couple of months while I get my mortgage business going. And
Oh
God is
my
good. I
gosh.
never looked back. So I've been a
Yeah.
full-time mortgage broker for 21 years. Never looked back. So
Jeez.
yes,
When
yes.
there's a will, there's a way,
There's a
right?
way. There's a will. There's a way. You know.
Now I'm stressed just hearing this
Listen,
story.
my sister just lived 5 minutes away where I was working because I
Yeah.
was in the electronics field. That's another thing. I wasn't in finance. I was in the electronics field. All right. So I used to sell to Research in Motion. Remember them? BlackBerry. I used to
Mhm.
sell to them. Digital security controls,
Yes.
um, Research in Motion, digital controls, NCR,
Yeah.
Leached, Bombardier. A lot of big companies. Because I used to work with engineers
Yeah.
and the purchasers. Because I was a technologist,
Yeah.
and I made that jump over to here. But I also want to fast forward a bit into the mortgage career now.
Mm.
Now I have my insurance license last 4 years now. And the reason I got my insurance license is because when I help people get a mortgage or refinance their debts, they
Mm.
somehow come back and have to refinance their debts again, right?
Yeah.
They
Yeah.
didn't put no insurance in place, they didn't put no investments in place, nothing like that. So it made sense for me to just, you know what, get my insurance license. I can help people like that. And I learned so much more in my own
Mm.
daily dealings that I wish I knew when I was younger, which we'll touch on later on too. So it's
Yeah.
it's it's been it's been a ride. It's been a ride.
It's been a heck of a ride for
Yes.
you.
Yes.
Jeez. And I want to fast forward to the being, or not fast forward, rewind back to being your mom's financial husband.
Hmm.
Because my mom passed away 3 years ago as
Oh,
well. And just taking that step into like being the youngest
yes.
in the house
Yes.
and then switching into like the woman of the house,
Yes.
it's tricky. So like when it came to you, because you're the youngest, how did you feel about that? And I know we will get to
Yes,
credit and stuff, but this is about financial well-being overall, right? So
yes.
I just want to hear your story as
You
well.
know, so yeah, the switching into it wasn't daunting for me.
Okay.
If you go back, you remember I said that I started working when I was 14. So let me dip into that a little bit.
Mm-hmm.
So I think I was 13 or 14, and my dad had a Mustang. I can't
Mm-hmm.
remember what it was. If it was a '78 Mustang, but it was nice, red, vroom, vroom, vroom. You know, guys love cars, you know. So I
Mm.
said, Daddy, I want your car. I said, well, I get that. I'm work too hard for that. But I'll show you how, I'll show you how you can get one.
Yes.
So I had a paper route when I was 12, 13 years old. And then after that, I lied saying that I was 16 years old to work at Mother Tucker's. You're right. Sometimes you have to do little things to,
And when
you
there's a
know,
will, there's a way.
there's a way. And then I put money in partner.
Yeah.
All the West Indians out
Mm,
there understand what partner
mm,
is,
mm, mm.
right? So I saved my money on that. And I turned 16 in May.
Yeah.
And then I bought my car in October. It just went easy, right? So
Yeah.
if I'm having that responsibility, I already knew how to manage money a little bit. And
Okay.
my parents trusted me such a way because um, I was taking my mom out driving already for she doesn't drive, so I used to take her for
Anyway.
Jewtown and
Mm.
right Eglinton and Vaughan, Eglinton and Oakwood. If you're from Toronto, right,
Oh,
you
those
know,
traffic these days now.
right, Nobile Farms, all those areas there. So
Yeah.
I always been a chauffeur for my mom certain ways.
Mm.
So when I came back um, to transition as the man in the house because all my siblings are out, I was the one
Yeah.
left home.
Okay.
It wasn't a bad transition because she already trusted me. You have to remember too, as a 19-year-old, I drove my car from
Mm.
Toronto to British Columbia, so I showed a lot of response, like I handle responsibility. I was
And
independent.
dedication. Yeah.
So my mother didn't really watch me a certain way. As long as I'm in the house at a certain time, I should know where I'm there. She's good. And even that, home at the same time, she kind of back off on that too, because once again, at 19 years old, for almost a year, I was living, half a year, I was living in British Columbia before I had to come back
Exactly.
home and cancel my stay out there.
Yeah.
So the transition was for me was pretty good. I look at these children now, they don't handle not even 10 or 20. I'll say, let me give them a little credit.
Yeah.
25% of the stress. I was gonna say 10%, 25% of the stress that I went through,
Mm.
right?
Mm.
It's good and it's good and bad in certain ways.
True.
Because when life start hitting them, God forbid something happens to me. You understand? Can they make
Mm.
that transition as easy as I did?
True.
And that's what
True.
concerns me about what's going on, the way we raise our kids as a society, not individually, as a society. All this
Mm-hmm.
feelings business.
Yeah.
Listen to me, man.
But there
Toughen
may,
up.
we need some balance though, you know?
Toughen up. Toughen up.
But I see what you're saying, because it is in a sense true, because I don't know what would happen if I experienced it at 19. I probably would have just been popped down and
Yeah.
just ball.
Yeah.
But um definitely need that balance of learning how to, handle society, because especially this economy now.
Yes. 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 I think this economy and society is very sensitive.
Mm-hmm.
Um, I really do. I do. I think it's too much at times.
Mm-hmm.
Once I explain to you what I meant, that's what
Okay.
I meant. Don't read nothing
True.
more into it.
True. True. I'm like,
If
but
you
what
if
do you mean? They're like, no, cut and dry, boom.
That's it. Done. Move on. Don't sweat the small stuff, you know.
Yeah.
Um, and as well as we are definitely going in. I'm not a
No worries.
social
No
worker or
worries.
anything like that. I'm a mortgage license,
Yeah.
insurance license individual trying to help people with their financial well-being.
Hmm. But when
Elevate.
it comes to having a building that trust and relationship with folks, them you being able to understand them and them able to
Yes.
understand you is
Yes.
a key thing.
Yes.
And it takes time, but obviously it takes time and trial and error for
Yes.
them type of things. And even with the trial and error of, well, no, it's not really a trial and error of you getting the house and losing.
Yeah. Yeah. Yeah.
That's another life is lifing.
Life is lifing.
I should have put
Life is
life is
lifing.
lifing.
That's
But
fine.
that transition from being in like a salesman for electronics to switching into mortgage,
Yeah.
why did you do that?
Okay. Okay. I was working hard. Okay. I was working two jobs. All right. So my main
Typical
job,
Jamaican.
right? Listen. So I was working at Aero Electronics. That's the name of the company. They're
Yeah.
called Original Electronic Manufacturing Company. My
Okay.
work hours from 8 to 5, but sometimes it could be from 7 to 7 because if you have to make your quota, if you
Mm.
have to take out an engineer or a purchaser out for dinner or play golf, there's a lot of smoozing with that. So that was a beautiful thing that I learned is how to manage different personalities. Because think about a
Mm.
purchaser who's buying
Mhm.
products for Bombardier when they need that product so the plane could get up. They want the product now. So I
Mm.
have to deal with that type of personality. Okay.
Action folks.
Action
Yeah.
folks. Then you have the other person who's the engineer that I help design the products into their motherboard, circuit board.
Mm.
I have to be able to speak to them on a technical standpoint,
Yep.
right?
Yep.
Which is a
Yep.
lot more
Mm-hmm.
systematic, a lot more technical. They want 3 or 4 different options, right? Because one is most efficient, one probably costs less. And just
Yes.
in case one part's not available, you can go to the third part.
Exactly. Okay.
So,
Those are the technical folks. There's a
right.
word, but I forgot it because I only remember action and blueprint.
Okay. Well, if you're looking at personality, they call it the
Mm.
star personality. Someone who's
Yeah.
system oriented, someone who's technical oriented,
Mm.
someone's action oriented, someone is
Mm-hmm.
relationship oriented. So
See?
that's star. So
Yes.
through my whole being of being at the as a salesman or a business development manager for the
Yeah.
electronic company, I developed these different techniques to deal with people with different personalities.
Mm.
So when I'm
Mm-hmm.
right, so
Mm-hmm.
to go to you what you're saying, how I made that transition, the transition wasn't hard because I
Yeah.
went to a mortgage brokerage company that had about 60 years worth of experience behind them. So
Okay.
what
Okay.
I did is tell
Mm-hmm.
people my story, just like we're doing right now. I said, listen, I manage purchasers and engineers. Let me understand these. Let me help you understand these different personalities.
Mm-hmm.
And sometimes these
Mm-hmm.
engineers, they're talking about parts I don't necessarily understand, but I have
Mm.
enough education and I have the people behind me, the companies behind me that I could
Yeah.
bring your concerns to and fulfill your needs. It's no different in the financing area. Me getting
See?
to know you right now, Cam, I'm not going to give you a
Yeah.
decision right now. I want to understand who you are, Cam. What are your
Exactly.
struggles? What are your goals
Mm-hmm.
and aspirations? Okay. Okay.
Boom. Boom.
Beautiful. You know what I'm going to do, Cam? Let me
Mm-hmm.
go back to Equitable Life. Let me go back to TD Bank. Let me
Yeah.
go to Industrial Lines. Let me go to RBC.
Mm-hmm.
Let me go to Home Trust. Do you heard about
Yeah.
Home Trust? No. Basically, I become you, Cam, for understanding what you want. I bring it
Yes.
back to all my suppliers, and I call myself, okay, Cam, watch here now. You have option one. You have option two. You have option three.
Yeah. And options are people love good options
They
too,
love good
right?
options, but now I vetted it with my expertise
Yeah.
on your behalf. You go to
Mm.
TD Bank now, right? They're just gonna tell you TD Bank stuff. Yes, man, sip your coffee, girl. You're not going to enough said. Enough said. And that's how I made that transition. Just painting the picture so the okay, that makes sense.
Yeah.
And we move on.
Nice.
That builds trust.
And the trust, building trust is very important. And did you find any pros and cons with
Mm,
transitioning? Because obviously, like some of them were quick, 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 fast.
yes.
But when you're dealing with people and their
Yes.
mortgages and
Yeah.
credit,
Yeah. Yeah.
jeez.
It could be. It could be. Yeah. There's a lot of challenges coming to my head right now. I'm thinking
Yeah.
about. Um, the most obvious ones people is probably thinking it about. Suppose you run in a situation where people cannot make a decision,
Mm.
right? They cannot make a
Mhm.
decision to go with you, or they may be shopping you.
Yes.
And this is where I need to teach them the difference between working with an individual lender bank
Hmm.
versus working with a broker, right?
Exactly.
I'm looking out for your best interest because that's the only time I get paid, when you actually completes your mortgage. So when they understand how I get paid, then they understand how I get paid. 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 Then they understand how
Hmm.
I'm not an hourly salary person. So I'm
Yes.
committed time for you right now to help you. Reason why? My motivation is to get paid, but in doing so, I got to make sure I satisfy your needs. Does that make sense?
It's like a it's like a give and take
It's like a
type of
give and take,
relationship.
right? If someone has, a credit issue, well, okay, maybe they can't buy it now, but I'm still
Yeah.
going to help them out to understand them and help them out to make them understand how their credit could be improved and what they could do going forward.
True.
So those, I don't know if it's pros and cons, because for me, I'm people oriented anyways. So I don't mind having these obstacles to work with.
Mm-hmm.
Um, but I guess one of the bigger cons is that you are self-employed. So time is money
Indeed.
for you, right?
Time
If
is money.
you don't want to waste time, and some people do waste your time. I'd rather you tell me up front what your intentions are,
Yep.
as
Yep.
opposed to stringing me on just for information and then you go work with someone else.
Hold on, hold on.
Yeah. Well, yeah, I'll get some water, wet my little tongue a little bit. Because that's probably the biggest con for me, to be honest with you, when they take you for granted. I don't like that. So if I sniff that out,
Mm.
if I sniff it out, because I have ways of sniffing out being 21 years in the business,
Yeah.
I said, no, Cam, listen, here's your answer real quickly, Cam. I don't say it, but here's your answers.
Yeah.
When you're
Yeah.
serious now, give me a call. But when that time comes, I would need this, I would need this, I would need this, I would need this, I would need this. Come
Mhm.
correct with those things that I need.
Yes.
Then we can work together. That's how you hire me. Does that make sense?
Mm-hmm.
Because
Mm-hmm.
I'm not asking for $500 retainer. I'm asking for your time, your trust, your honor, your integrity. If you cannot give me that,
Yeah.
then I have to move on to someone who's ready to move now with me. It's
Exactly.
only
And
fair.
exactly. And it's really fair. Like when you say take it taken for granted. Ooh,
Yeah,
ooh,
yeah,
it hits a nail.
yeah.
And with helping folks figure out like those five things they need, and let's just say like with credit, what is the five things they would five five things they need with credit or to
Okay.
have a great credit history? I've done it before,
Hmm.
but I know I'm like, guys, I kind of forgot.
Yeah.
Might go with some, but
Listen, it's
there's so
hard to
much.
remember. There's so
Yeah.
much. I sometimes I forget. You're basically talking about the five C's of credit.
Yeah.
The five C's of credit. So, what is
Yes.
credit first, guys? What is credit?
Hmm.
Credit is basically showing the particular lender your credit worthiness. So, I'm asking credit worthy. What is credit again? The worthiness of you to pay back a loan. You know,
Hmm.
the capability of paying back a loan. So that's what credit is all about. And the five C's of credit is things that these lenders will look at to see if you're credit worthy. Now, people look at credit score alone and think that's the end all be all, but it's not the end all be all. Credit score, that number is just if it's going to open the door or not. Do you have the right key to open the door or not? But now, when you open the door to the house, is the house clean or not? Or is it dirty inside and so forth?
Like a hoarder.
Like a
No,
hoarder.
no offense to the
No,
hoarders.
no offense, but but if you have everything in the nooks, there's so much nooks and cranny and dirts in the corner, they may not want to lend to you still because people say, "Well, I have a 700 beacon score." 700 beacon score is not enough because you know what
Mm,
700 beacon score could be. You just finished bankruptcy 3 years ago, and now you have no credit, so you're starting over again with just
mhm.
like one Capital One card at $200 limits. Will
Jeez.
someone lend to you on that case? Yes,
Hmm.
some lenders will lend to you in that case,
Yeah.
but it'll be a high interest situation. Okay, and we'll get more into that too as well. So going back to the five C's of credit now that I gave you a little opening on it, the first C is character, your actual character. Who is Ted Evans?
Mhm.
If I pull his credit bureau, do I see like five different addresses in 5 months? Why is that? Why are you moving so much? You're not stable,
Mm.
right? Where do you
Mm.
work? How long have you had that work?
Mhm.
Right?
Mhm.
If you change work two or three times in the last year or two, did you change because you got promoted? Was it a lateral move? Was it a vertical move? Was it right? Those things. Um, Character. If they're seeing a lot of late payments on your credit bureau, that tells me why are you late? What happened? Did COVID cause the problem? Okay, we'll give you a blind. But hold on a
Mhm.
second though. We've seen late payments before COVID. Now you're back to work after COVID. You still have late payments. Tell me more, right? That character don't look good. So the
Yeah.
first major C is the character, overall character of the person.
Yeah.
So people ask, why you want to know that for? Why you want to know that? Listen, if I'm going to lend you three, 400,000 or $1 million for a house, yes,
At
okay,
least, at
okay,
least.
at least, okay. So that's the first C, major
Mm,
C, character, who you
golly.
are.
Yes.
The next C is capacity to
Mm,
make money and pay your bills.
yes.
Okay, don't come
Mhm.
tell me that you have a $200,000 for a down payment,
Yeah.
but you don't have a job.
So,
How-
okay. So, hold on. With that one, so let's say someone just got inheritance, right? And they're like, all right, I finally got this money. I want to get into the real estate. But yeah, like I'm trying to think of someone like young, like a 20-year-old or 22
Mhm,
year old that
mhm,
experienced a tragic scenario,
mhm,
right? And they got that 200K,
mhm.
and they're like, okay, this is the final chance I get
Yep,
to get get into
yep,
the real estate. I
yep.
mean that 200's nothing these days, but it's something. It's something.
Yep.
They could
So
at least do the
it's a good down payment.
20%.
It's a good down payment. It's a good down payment.
Right?
Hmm.
So what about that person?
All right. Capacity, once again, the
Mm,
ability to make payments. So the
yes.
$200,000 down, but you still have a
Mm.
$500,000 mortgage.
Oh, shucks.
You see? How are you making those payments going forward? Is the property be a rental property? Will the rental take care of the mortgage payment?
Mm,
How are we going to service the mortgage? How are we
yeah.
going to service the loan, the car payment, the capacity, the income? So down payment is a good thing.
Mm,
Now, the banks will say hell to the no, no, no if you don't have no income. They will say it. But I
facts,
could get a
facts.
private investor to probably give you a mortgage. But I'll tell you this, it's gonna be a high interest rate. And you miss that payment, they're gonna go to the courts to sell that house to get their mortgage back. So you want capacity. Capacity is gonna be needed.
Okay.
That's part of your credit.
Mm, mm,
Okay. And you should actually have enough income where you're not using no more than 40% of your gross monthly income to service mortgage payments, property tax, heating,
40%?
40%. 40% of your gross monthly income. You could probably go to 44% by exception with the banks, depending
Yes.
on how good your credit overall credit looks, to service mortgage payment, property tax, heating, 50% of the condo fee if it's there, and
Mm.
all other debts. So do the
I
math in your head, and you can see
me
that
know
money
say
don't go far.
me know say someone's gonna get mad.
Yes. Right?
I'm so sorry, folks. Like,
So it's tough.
right?
It's tough.
Jeez. But these are good things to know because you don't want to be like blindsided
No,
for these type of things, right? So I'm glad we're talking about that because then people are like, but I thought I could be a homeowner and
yeah,
this and that.
it takes more.
Yeah.
It takes more. Speak to individual consultant,
Mm.
licensed mortgage consultant, because we
Yes.
have a lot of consultants out there saying we can help you get a mortgage, but they're not licensed. Some bandulu business do. Be careful with that. They're just looking to make a quick buck, and in 6 months you can't afford a home, and you're out.
Mm.
I've seen too many of those stories.
Ah,
So, licensed mortgage consultant, please.
exactly.
Yeah.
Jeez. And the third one, we're
Well,
on the third one.
before that, you see that 44%? Now think about this.
Mm.
44% of your gross income. Question for you.
Mm.
Question for you. Because you're a tax accountant, you're a bookkeeper, right? This is your
Mm.
expertise. I'm gonna have a question
Yes.
for you to make sure people
Oh
understand.
snap! I
It's
gotta make
44.
sure
No,
the
no, you got the
calculator's
answer.
there.
No, no, you got the answer.
Okay. Okay.
On an average income of about 70K per year, 70,000 a year. What marginal tax bracket are you in? How much income are you taking home out of 70K? About 70%,
Oh,
65% maybe?
about that. Yeah. You're around that 35, 40 range, give or
Okay,
take.
that's what I thought. So think about this now, Cam.
Mm.
Come here, think about this. So you hear that she's a professional accountant on this side here. Okay, she's saying basically you only take home, let's say 62%, 65% of your income that you guys earn. The banks are using up to 45% of your gross income. Let this sit in a bit. So if we're using up to 44% of your gross income, but the government's already taking about 35% up front, 44 plus 35 give you what? 79% of your
Mhm.
income is used to pay everything. You got
Yeah.
to live on 21% of that income. Let's do the math. So every $1,000, you only have $210 to use to buy food, clothing,
Mm.
take your kids to daycare, whatever expenses you have.
Yeah.
That's where you're feeling the financial strain now. And I want to hit the home. I want to hit this home with you guys.
Hmm.
Even though I say 40% of your gross income,
Yes.
let's say you're getting approved basically on 79% of your gross income. You're left with 21% to live. Let that sit in, guys. So when someone tell you could get you a mortgage, that when I tell you this is your maximum mortgage, and someone
Hmm.
tell you they could get you a mortgage based on your verified income, and you have no
Hmm.
other income coming in, why are you buying that home for? I
You
just
see
want to make
how
sure I hit.
you see how see how it hurts, y'all? Just hearing it, like just hearing you do those numbers, and I think having a percentage and people hearing the numbers is so crucial. And I don't want anyone to get scared,
No,
but
no.
it's a way to plan. Because if you can't get it this year, you want to make sure you figure out a plan so you're able to think about 2025, 2026, or
And there's a lot,
2027.
and you can still invest in real estate.
True.
It's just maybe passive investment in real estate investment trusts.
Mm-hmm. Mm-hmm.
Speak to a financial
REITs.
advisor, and they'll tell you what you could do with that.
Yeah.
Okay, we're going a little
True.
too off topic, but I just want to give you, just make sure you understand. Credit is
Mm-hmm.
very important, and these numbers are
Yes.
very important to understand.
Yes.
All right, beautiful.
Whew.
There we go. So we talked about character. We talked
Yes.
about capacity, the ability
Mm-hmm.
to make payments, your income. The next thing we could talk about is actual collateral.
Okay.
Do you have
Ooh.
something that you could put the mortgage or the loan towards? 'Cause I'm going to think about
Mm-hmm.
car loans. A lot of time people get approved for car loans so easy. They have bad credit, no, bad credit, but they can still get a car loan. You know why? You don't make
Just
that car payment, they take the car from you.
and the amount of times I've seen the repo more in the states that happens, but
Yes.
I've seen it here, and I
Yeah.
was like, oh,
Yeah.
it's so.
Right. Right. So collateral.
Yeah.
So let's the cars. So that's why you get loans on cars. Very easy. But let's talk about
Yes.
house now. Let's talk about real estate. Collateral could help you get a mortgage because the
Hmm.
property is in good shape and a good place in the city.
Yeah.
A home in the city will sell a lot faster than a home in the suburbs or even a farmland. There's not too many people who buy
Mm.
farmland or a farmhouse
Yeah.
or a mechanic shop. If you have a mechanic shop with a lot of oil and grease, you need a bigger down payment for that because how many people are buying that type of product, that real estate? So
Mm.
collateral, right? So
Yeah.
collateral is something that will help you get that loan
Mm.
if you have a good piece of collateral to put towards.
Okay. And what type of collateral can folks use? Because I feel like when I hear collateral, it kind of reminds me of leveraging
Yep, it's
as
leveraging.
well.
Beautiful.
Okay.
Okay.
Boom, bam,
So
bam.
cash value in an insurance policy. You could borrow
Okay.
against that.
Hmm.
Right? That's another topic we could talk about because that's that infinity bank thing. It's
Yeah.
borrowing from your own bank, but you don't have no payments until your estate pays it off, passed on and so forth.
Mm-hmm.
You could borrow from in factoring, it's called. So you have invoices coming in, bills coming
Yes.
in, you could borrow
Yes.
from that.
Okay. Mm-hmm.
Real estate we talked about,
Mm-hmm.
cars we talk about,
Yes.
machinery, heavy machinery you could borrow against.
True.
Those
True.
are collaterals.
Okay.
So if you have no collateral, your credit better be that much better,
Mm.
and your income better be that much better
Better.
because
Okay.
there's no
Okay.
collateral to put the
Mm-hmm.
loan against. All right. So that's what collateral. Collateral is a very big thing in the credit situation as well. Okay. 5 C's. So that's the third C, right?
Yes.
All right. The fourth C
Mm.
is capital. What kind of down payment? What kind of investments you want to have? What kind of savings do you have? Right.
Mm-hmm. Mm-hmm.
And right, and that's very important because if your credit's not showing that well, meaning that you don't have good payment history,
Yeah.
but you have a lot of money saved, that'll help you
And
get a loan as well.
true. And
Okay.
and does it also relate with the debt to income ratio as well?
At
Or that's a
times,
different?
yes, at
Okay.
times, no, at times they look at that too as well, for sure,
Mm.
right? Because
Mhm.
with I'll tell you in the situation you look at it. There's two main ones I can think about.
Yeah.
If you are a senior over
Hmm.
55 years old, I hate saying that seniors are 55. I'm almost there. Oh my gosh. Anyways, if you're more of a mature individual, let me say
Mature
that.
individual. Yes.
Mature
Yes.
individual, right? And you
Yes.
have capital, which is like in
Hmm.
this case, equity in your home,
Yeah. Mm.
you could get qualified for a reverse mortgage because
Mm.
there's so much equity in your home
Yeah.
that most likely will not outlive the equity in your home. That's why they'll
Sure.
qualify you for a reverse mortgage because when you pass on or sell the
Mm.
property, the
Yeah.
mortgage will be paid off.
Okay.
So
Mm.
that's a good that how capital helps you in that situation, right?
Bum bum.
Another way capital
Mm.
savings will help you is
Yes.
suppose you are um, an investor. So you
Hmm.
don't necessarily have a lot of income coming in regularly. You have
Yes.
interest income coming in and that kind of stuff. And
Mm.
you could prove you have like 2 years worth of investments put down to handle the mortgage payments. In that case, that could help you as well get approved for a loan.
So like a high interest account or
Mutual funds,
non-registered mutual
mutual
funds,
funds,
ETF.
a whole life insurance policy that has guaranteed dividends in it,
Okay.
right?
Okay.
Um, things like that, all that
Mhm.
stocks,
Yes.
whatever. If you could show that, that could help you get qualified for a loan because that helps your credit as well.
Yes.
How money really
Okay.
gets to you.
Boom, bam, bam.
Okay. So that's a good thing to know. So that's capital.
Mhm.
The last one is conditions. What con what are the type of conditional environment you're in? Now, let's talk about this real estate thing here.
Mm.
It's hard right now, if you notice. Okay. So a lot of
Groceries.
groceries, carbon tax up in your jeez. I'm trying to release some carbon, so I'm gonna get taxed on that. Like, come on, like crazy, crazy, crazy.
I know, and some people have gotten that back of their taxes. Like, oh, what's this? I'm like,
No, no.
I mean,
So in
it's
this condition environments where you
yes,
see real estates being tough at higher interest,
yeah, yeah.
lenders are being harder on their mortgage qualifications now
Mm,
because they're realizing people has high debts, high living expenses. They're realizing people are having problems making their payments now since the interest rates, especially the Bank of Canada rate, I'd say, the prime went from like I can't remember what it was now because it seemed I'm just traumatized. I think it was like 2.5. I am. It's like right? It wasn't just 2 months, 2 years ago. It was like 2.5. Now it's at
it
7.2.
was. It's crazy. It's absolutely ridiculous, actually.
Right? So people's mortgages doubled.
Hmm. And I've
So
seen it. I've
yes,
seen it.
yes.
Ugh.
People have to refinance to get the payments back in place, or God forbid, maybe sell the place, or maybe
Mm,
Airbnb a place, or get someone. It's people are doing some crazy, not crazy, drastic stuff now to stay in their home. It's I see it every week. I have this conversation, and I'm trying to be a reason, a voice of hope for them. But back in my
mhm.
head, I said, "Boy, you have to make some tough decisions. That's the bottom line. You got to make some
Yeah.
tough decisions, right? Either you increase your income instantaneously, become entrepreneur like us, where you could
Hmm.
try to hustle more,
Hmm.
right? Or you downsize your debt and downsize your debt. Maybe you have to sell it off or something. I don't know if you can't
Yeah.
qualify for a refinance. So the
You gotta.
conditions, yeah, conditions could determine if a
Yeah.
loan would be provided or not because of the economical conditions or environmental conditions and so forth. So those are the five C's of credit that lenders weigh in every time they see an application. Who is this
Yeah.
person?
Hmm.
What's a character? What's their capacity?
Hmm.
What's collateral? What's the capital down? And what are the conditions, overall conditions of the environment?
Now, one question I'm gonna ask is, out of the five C's,
Mm.
which one do you think is the most important
Out of the five C's,
one? Mm, I know
wow,
that's a tough question.
it is because it's intertwined a lot,
Okay.
right?
Okay.
Like It's
Top
intertwined.
two, top three?
Okay, I can give you top two for
Okay.
credit. The top
Yeah.
two,
Yeah.
and that is actually capacity,
Okay.
your income, the
Mm.
capabilities to pay.
Mm.
That's a very high one.
Yes.
And the second one, character. Those are the top two ones. I'll tell you why I say that. Right? If you come from good character, and I mean everyone means well. So let me just dig back and remind what people character is. How stable you are where you're living. How stable is your job? Okay. Do you
Mm-hmm.
do you do what you say you're gonna do and say what you're going to do? Integrity,
Mm.
right? So
Mm-hmm.
character is very big, and your credit will show that. Because I know a lot of people, they don't realize what they're doing, but I lend them this pen, and they said they're gonna give me the pen back by the end of
Mm.
the day. Or end of the day, you're gonna give me this pen.
Yep.
The end of the day come, the pen don't come back. The
Mm.
next morning I wake up, I don't see my pen on my desk. Now I can't write. Listen to me. You didn't do what you said you did. You said you promised you're gonna give me $10 when I
Yes.
asked you at the time I need it. That's your minimum payment,
Yeah.
$10.
Yes.
Give me my $10 back.
No, you know what? Now that you say it like that, and if you even think about like if folks could think about like IOUs,
Yeah.
when someone said like, yo, beg $100, I'll
Mm,
give it back to you by the
mm,
end of the week. And end of
mm.
the week come and you're like, that's weird.
You understand? I need my pen to write. You
Yeah.
need your $100 to pay your bill, maybe.
Boom.
Because a lot of time,
Jeez.
a lot of time we're not rich. But you know what? I'll break off a little something to help you. But as long as you make sure you pay it back when you need to pay me back, so I can help
Exactly.
myself again. So I
Mm-hmm.
came in now tomorrow, just tomorrow, to come
Yes.
do my work with my pen. I'm a pen on my desk. Now I'm gonna add something else to this character part now, Cam.
Yeah. Yeah.
Not only I came back in the morning, I don't see my pen, but my
Mm.
writing pad gone too. My writing pad gone. Am I gonna be upset or am I gonna be upset? Right? Am I gonna be upset or am I gonna be upset?
That's that's a perfect analogy.
Okay. So let me explain where I'm coming with that analogy.
Hmm.
Not only did it make your minimum payment of $10,
Mm.
but you actually max out your credit limit. That's gonna hurt your credit score like crazy. People don't realize that.
Ah.
Okay? Because now you actually have no credit.
Mm.
Even though you had $10,000 credit limit, you have a $10,000 balance, and you didn't make your minimum payment. So now you owe $10,000 plus 10. You're over your limit. What does that look like for your character?
Mm. And
Okay?
you know what? You know what's crazy is that no, yeah, I'll say that. What's crazy is that we don't talk about the five C's as much with credit. We usually focus more on, which is still important, is a credit score. But
That's what I'm trying.
I'm glad you're talking about it because I've obviously heard about the five C's, but when you put it in that way, you're
Yeah.
like, okay.
Yeah.
You're
And
like,
and
okay,
and and like I said, we just don't know.
yeah,
Because you know what people sometimes say? Okay, I said I'm gonna give you the pen tonight. But don't worry, man. I'll give you 10 pence tomorrow morning. You get where I'm coming from?
mm,
So people look at it like my minimum payment is $10. Sure,
yes,
I'm gonna pay it off next week anyway, so it's okay. No, when you sign that contract, you didn't tell me you're gonna make the minimum payment
yes,
monthly by the due date. That's what the contract says.
mm-hmm.
If you want to pay it off next week, then you pay off the balance next week. But give him a pen back.
I want my pen.
Yeah, right?
Where is my pen? This is
I
my
have it
favorite
right.
pen.
I have to
Yes.
use it. And that's what they're saying. They
Yeah.
want their interest. They have to use it. They want to reinvest it. All those kind of things.
Mm. Man, because
Yeah.
that's another thing. Jeez. So, hmm, do we want to talk about the credit score, or do we? So, when it comes to the five C's and improving the credit, how can someone improve their credit?
Beautiful. Beautiful. Well, if you look at some of the stuff we just talked about now, you want to
Mm-hmm.
make sure you do the positive things I talked about.
Yes.
Making your payment on time. Okay. If your payment due, like for instance, your payment was due today at 25th, of May.
Mm, mm,
Pay on the 20th of May, so it has enough days to be processed.
true, true,
People doesn't
true.
realize that sometimes it takes 3 days or so for a payment to be processed. So you don't pay your payment on the due date. You pay your payment 5 days before the due date.
Yes.
So it's
And
time to process.
because folks, we have to remember, it's not like a e-transfer where it comes quick like that. The bank has 2 to 3 business days
Yes.
to process things. So that's fair.
Yes.
I mean
We don't
that's
we don't think
absolutely
about
fair.
it. We don't think about it,
Mm-hmm.
but that's a, like if you really sit down and say, yeah, that makes sense,
Mm-hmm.
right?
Mm-hmm.
So pay 5 days prior, so you make sure your payment's there and registered by the due date. Okay.
Mm-hmm.
Another thing we talked about, going to your limit. I recommend people never go to your limit for a couple of reasons. One, if you're borrowing that much money to your limit and you can't pay it off next month, how much interest are you paying? Interest rates on credit cards are from what, 20% to 30%, depending what type of credit card you have.
And
I
let's
don't know if
not
you
talk
guys,
about the money mart and stuff. That's
right. Have you heard about the rules of 72, Cam?
of course.
Okay. All right. All right.
Oh, I know what you're gonna do. I know
Yes.
exactly what you're gonna do.
Yeah. So now you carry this $10,000 credit card, maxed out
Mm-hmm.
at say 20%. Albert Einstein, the mathematician who made it very famous, talking about the rule of 72 and how this works, basically say you take your interest you're earning, or in this case, the interest that you're paying, divide it into 72. So 72 divided by 20 means every 3 years and 6 months, approximately, that balance could double. That's why when you pay the minimum payment, that may take you 20 something years to pay off that $10,000 debt, because most of the interest is consuming your minimum payment.
Mm-hmm.
So don't
Mm-hmm.
buy something that you can't pay off next month.
True.
Now we know emergency happens, and emergency happens because you don't have savings, and you don't have savings, so you have to use your credit. So why not make sure that you start saving money for yourself so you can borrow from yourself interest
Mm-hmm.
free?
Yep.
Live
Uh,
within your means and have a budget and figure this out. And I know it's not
safety
easy
net.
during these days. I know it's
Yeah.
not easy right now, but we need to be very mindful about the rule of 72 and how could work for us or
Mm.
against us.
Yep. I,
Okay.
you're speaking to the choir when I say
Yeah.
that, because that's like one of the things. Like having a safety net is really key, especially this economy. And I know someone's gonna be like, "Oh, so how am I supposed to save, Camille?" I I have shown ways of saving at least $1 or at least
Yes.
$5
Yes.
every page. At least I don't care if it's 10 cents. I just want you to get the habit of saving, so you're able to increase it eventually, and then
Yes.
it's just it's like clockwork.
Right.
It's like brushing your teeth.
For sure. For sure. And I like when you said that, Cam, because I experienced myself. There was
Mm,
one time I said, you know what? I'll save when I make more money. I'll save when I make more money. Then I make more money, and before I save, I actually
yep.
spend more money.
That
So
lifestyle creep.
that lifestyle creep. I'm a victim of it myself. That's why I said I'm
Mhm.
human.
Yes.
So I can
Yes.
teach people from my own experience as well as from my expertise as well in the field now too. It's like, whoa, when I tell you this, there's a reason I'm telling you.
Yes.
If I touch a stove and I said the stove burn, you know, look at a baby. When a baby touch something hot, you know the baby don't touch that again. They run the
Yep.
next way.
Or sometimes I forget and they touch it
They
again.
turn. Okay, but they're not gonna do it the third time because it hurts.
True.
So if I
True.
tell you something from my own experience and also expertise,
Mm-hmm.
I guess who don't hear must feel. But why do you want to feel that way,
Exactly.
right? So we
That's.
talked about payments.
Mm-hmm.
Making sure you make your payments on time. We talked about not maxing yourself out,
Yeah.
and I do recommend that you don't use no more than 50% of your limit.
Okay.
Right?
Okay. So that's a little bit different from before, but I understand why, because of how the economy
Yeah,
is going these days.
for sure. And if you max out your credit card, you technically don't have no credit, no available credit. So try practice yourself not going more than 50%. If you start reaching 50% of your credit, you realize that you got to tighten up your reins and start paying this
Mm,
down quickly if you cannot pay it in one lump sum.
True. True.
right?
Mm-hmm.
But people keep
Mm-hmm.
on going like it's free money. And then the Rule of 72 hits them that they can't have no problems. They have problems paying, and then also they have to go consumer proposal, bankruptcy, and that kind of stuff.
And I think it's really important because you mentioned it before, the minimum balance. If you actually look at, if you only play the well, minimum balance, that will take, you said 26 to 30 years. You realize if you add a
Mhm.
little bit more, you'll pay it off sooner.
For anything add more goes to principal. To your point, just
Exactly.
lower the principal, the less interest you're paying. Period. So you pay it off faster, for sure. For
You know
sure.
what? I don't know about you. The only interest I love
Mhm.
is when it comes to me.
I tell you, I'm loving it. I'm loving it for sure. Investments is the best way to go. Best way.
Right?
So,
Golly.
one thing I want to say too, we didn't really touch on bankruptcy and credit, but let me touch on
Mm.
investments,
Mm-hmm.
right? It's how to improve your credit. Let's talk about this.
Yes.
People think it's end of the world if they have a bankruptcy. Life happens,
Life
right?
is life. Mm-hmm.
Life is lifing. There could be a death in the family now. Income has been affected, so now you can't make payments. You could have lost your job, and now you can't make
Mm-hmm.
payments. You could have had some financial decision that wasn't working for you, and now you can't make payments. Okay,
Mm-hmm.
if you're in a bankruptcy situation and you just discharge your bankruptcy, I want to let people understand that you can still buy a home after 3 years of the bankruptcy being discharged. And how you do that is by getting two new credit cards with a limit
Okay.
of 2,500 at minimum,
Okay. Watch the
and
gems.
you
Watch the
get
gems,
approved.
y'all.
This is going to be a gem for sure because a lot of people think they have to wait for the bankruptcy to roll off their credit bureau for
Mm-hmm.
6 years and then they
Mm-hmm.
start reestablishing the credit. No, as soon as the bankruptcy discharge, I'm going to give you the blueprint here.
Yes.
The bankruptcy discharged yesterday.
Mm-hmm.
Today, you qualify for a secured visa. That means
Mm.
a secured visa is when you put $1,000 towards a credit card, so they give you $1,000 credit limit, and you use it like just any other Visa or Mastercard out there. You run that for about 6 months, secured visa for 6 months,
Mm-hmm.
and then you go to Canadian Tire Card and get a Mastercard there. Why is it
That
Canadian
one,
Tire? Yes,
let me hear why.
I'm
Because
gonna tell you why.
golly.
Canadian Tire wants you to spend money in their store.
Exactly.
So
Mm-hmm.
they're going to give you a Canadian Tire card, but it has a Visa emblem, so you could use it just like
Mm.
any other store.
Okay.
Okay, it's not a regular department store. I would not say get a Sears card or Walmart
Okay. I
card
was about
or
to ask, I was like, what about Walmart?
actually Walmart card you probably can because it's a Mastercard Visa again attached to it. Any card that has a Visa Mastercard on it, that's
Okay.
gonna go. I wouldn't go get a Bay card department store because you only can use that at Bay generally. I don't even know if Bay's
Mm.
still around, but anyways, like you get.
I'm
I
trying
don't
to
know.
remember too.
I
I'm
don't
trying
see
to.
much.
I think it got rid of the one in Town Center, Scarborough Town Center.
Yeah, I don't know.
Correct us if we're wrong, folks. Because
Yes.
right now I don't remember. Except, but
I don't know. I can say I don't go shopping at base, so I don't recall. But anyways,
yeah,
so that's the thing I want you guys to understand. Secured Visa can help you reestablish your credit if you went through a bankruptcy.
yeah.
Okay, you
Mhm.
run it for 6 months. If you get qualified at Canadian Tire Mastercard or Walmart Mastercard after the 6 months, do not cancel the secured Visa yet. You always want your card to run for yes, run that for 2 years at
Yeah.
least.
Mm.
Once your unsecured credit card is running for 2 years, then you want to cancel your secured Visa and get whatever money you didn't spend on it.
Yeah. Okay.
Okay? Because
Okay.
the
Okay.
key here is 2 years that credit card is running.
Mm-hmm.
And you want a
Mm-hmm.
minimum limit of 2,500. So now when you go for a mortgage, they can say,
Yeah.
okay, we see you got bankruptcy discharge. Why did you have a bankruptcy in place? Yada yada, lost job. A family member passed on. I couldn't pay my bills. Whatever the story is. Oh, but I
Yeah.
saw you got now I saw you got 2 years reestablished credit, and there's no late payments. You carry a low balance, if not zero balance. You can still get approved for a mortgage for 5% down, or
Okay.
7.5% approximately if the purchase
Mm.
price over 500,000.
Yes.
So a lot of people don't realize that. So I hope you guys get that little gem to
Voila.
understand you can
Voila.
reestablish
Voila.
your
I have to write that one. Voila. Voila.
credit.
5%.
Yes, 5% down on the first 500,000 of the purchase price.
Mm-hmm.
And then the balance of the purchase price, let's say it's a $700,000 purchase price. You need
Yes.
another 200,000 to make up to 700,000. That 200,000 you times it by 10%, and that would be your minimum down payment on that property. So if $700,000 purchase price will give you a minimum down payment of 25 plus 20, $45,000 is your minimum down payment. After bankruptcy discharge, running your credit for 2 years
Mhm.
plus, you could get qualified for a minimum down payment of $45,000 on a
Ah,
$700,000 purchase price.
guys, I'm trying to write this as fast as my as my brain.
Yeah, first 500,000, 5% down. There you go. Example.
Boom.
Yes, you got it. 5% of first, which is so okay. You almost got it. 5%
Yeah.
down on the first 500,000, and
Yes.
10% down on the balance
Ah, yes. Okay. 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 Okay.
to
Okay.
make up to complete the purchase price.
10%
So
on the
on the balance to
balance.
complete the purchase price. That's the best way to put it. I should be typing with you.
I was like, oh, I'm trying to remember as much as possible.
Yeah.
Oh, I did something. Oh, nope, 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 nope. It should be fine.
So 5% on the first 500,000, 10% on the balance to make the purchase price.
Yeah, we're doing like this. There's no
Okay,
comma, guys. It's
and it's
okay.
not
But you hear
750. It's not 750. It's 700,000. Is example.
700. Oh,
So that in that there's 750. That'll be 250,000. So 10% on
yeah.
that is 25,000 plus 25,000. The down payment will be 50,000. So you can change the 45 to
Mhm.
50,000. That's all you have to do.
Okay. Boom, bam, bam.
Get it now? There you
Always
go.
trying to.
Good stuff.
Thank you. Thank you.
You got the typing going on, girl. You got the typing going on. So that's it.
Ooh. Boom.
Boom. She got it, guys. She got it. She got it. She got it. There you go. There you
Anyone
go.
that's listening is gonna be like, "What is happening?" It's okay. Watch it, and you'll understand.
Yes, that's right. That's right. Perfect. And that's what you can do when your
Mhm.
bankruptcy discharge with 2 years plus reestablished credit. You don't have to wait for the bankruptcy to be rolled off your credit bureau. That's a
Okay.
misconception.
Okay. Yeah.
Misconception. Okay.
Okay.
Yeah.
So we know how to improve our
Credit.
credit. We,
Yes.
we we have the reality of bankruptcy even in this time of
Yes.
the
Yes.
economy because, like we said before, life is lifing
Mhm.
and shit happens, and we just want no matter what. I love that you're saying this strategy just for those people that feel like hopeless at the time.
Yeah.
Like you can still come back from like tragic moments,
Yes, you can.
right? So like that, I'm glad that we surfaced this.
Mhm.
And do we want to talk about the credit score real quick? Nah, well, it depends. Are you
Okay.
comfortable, or do you want to talk about mortgages because that's your specialty as
Okay.
well? So
Um,
how?
you know what? Let's ask that question. Maybe I can answer the
Mhm.
question, answer your question quickly, the one you bought the credit, and then we'll seg that into mortgages. How
Okay,
credit affects that.
so the credit score,
Yes.
how if anyone knows like how do we get that perfect score? What do we do? I know there's a character, capital, collateral, conditions, and capacity. Boom.
Capacity.
Gotcha.
Beautiful.
um but there's also folks that want like they're like, I don't care about this stuff, but how do I get that perfect or as a perfect score as possible?
Okay, that exactly. 'Cause a perfect score, I
Mhm.
would not be able to say a
I
perfect
know,
score is
right?
900, and I haven't seen a 900 credit score ever.
Ever?
I've ever. I've seen like an 856, I think it was something like that. And to me, that's
Okay.
perfect. To be honest with you,
Yeah.
that's
True.
perfect,
True.
right?
How,
Because
how do we go from good
to great.
to great?
All right.
And
So what
excellent.
is good? Good is like 600,
Yeah.
620. That's good.
Okay.
Great is anything over 680. And let me explain why I say
Okay.
680 above is great.
Mm.
With that 680 credit score, as long as you have the capacity, the income to make payments, you'll get
Yes.
whatever product you ask for.
Mm.
And one of the best products are out there are home equity line of credits. And
Yep.
right,
Yep. Yep.
you need a 680 beacon score. So when people say, my credit score is only 720, I say, what do you mean only 720? To me, that is excellent. It opens the door for you.
Right?
Don't worry about your credit score not being 900. Just worry about it's over 700. That
Mm-hmm.
opens the door
Mm-hmm.
for all stuff out there available to you as long as you have the income to make payments.
True. I think that's a myth that people don't realize
Mhm.
that they're oh, I gotta get that 900 or it's 850. Okay, I'm good. What now? Right?
Exactly. What now? What now? It doesn't. What is it doing for you? It's not doing anything for you. And I cannot tell you how exactly to get the perfect score. The perfect score is when you're just
Mm,
born, or as soon as you get a social insurance number, right? That's the perfect score.
yeah.
But really, truly, you utilize your credit, so it's never going to be 900. It's going to be utilized. What you want
True.
to make sure it's over 700 because that
Mm,
opens all doors.
yes.
That's all.
So that's key. So 680 and greater.
Yeah.
I know obviously paying on time
Yeah.
is
All the
one of
five
them.
C's, all the five
Yes.
C's makes up
Yes.
the best score possible.
Okay.
Keeping your balance low, below 50%,
Mm-hmm.
paying on time,
Mm-hmm.
right?
Yes.
One thing we never talked about,
Mm.
credit checks.
Yes. Ooh, yes, 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 yes.
People think doing a credit check today, a credit check tomorrow, a credit check next week will hurt the credit score. It doesn't hurt the credit score. Credit checks only represents only
Mm.
10% of your score. Only 10%.
Okay.
Capacity, um, collateral, not
Mm-hmm.
capacity, utilization,
Yes.
and type of credit
Type of
represent
and
represent about 60.
history.
Yes, history. Thank you.
Mhm. Yeah.
Represent about 65% of your credit score. Those three
Okay.
things.
Mm.
65%. Okay. So, worrying about not worrying about credit checks will not hurt you. I'll tell you where credit checks really do hurt you though.
Mm.
There's two different situations here.
Yeah.
If you had late payments already, very spotty
Mm-hmm.
late payments, and then
Yes.
you do like several credit checks in a span of a month, it's gonna hurt your credit
Yeah.
score because you already have
Oh.
late payments. You can't manage the credit you have already, and you're doing multiple credit checks again. It's gonna hurt your credit score. Okay, common
Mm.
sense, right? When you think about it.
Yeah.
Another place where your credit score, you're doing credit check will hurt you is if you did multiple credit checks month of May, multiple credit checks of April,
Mm.
May, June, July, August. It's constantly doing credit. It's gonna hurt you
Yeah.
because I don't know, like how many cars are you buying every month? How many houses you buying every month? Right?
Unless you got it like that, but
Right? It's gonna hurt your credit score.
yeah.
But if you do a credit check, let's say like five different credit checks in a span of 21 days, I think it is 21 days.
Okay.
Equifax understands that you're shopping for a car loan or a
Hmm.
mortgage. They'll
Yes.
generally group it as one credit check in the algorithm of the credit
Of
score.
21.
So when people tell me that they already did a credit check, and I
Hmm.
said, that's fine. I tell them this story as
Yes.
well as if I do a credit check, it's not going to credit score. And a lot of the time it doesn't. It doesn't hurt the credit score.
Yeah.
But and banks tell you this that do not do any other credit check. You know why banks tell you that? They don't want you to go shop. It's self-serving for them. Where people ask me, Ted, do you mind if I go check somewhere else? Go right ahead.
True.
Because here's the thing, you're trying to shop a mortgage broker. I'm
Exactly.
confident that if you're gonna get I could get you the best mortgage cam because I have multiple lenders with me. So I never tell you don't do a credit check. I tell you exactly how credit works. You can do another
Yeah.
credit check if you want. If you don't feel comfortable with me, it's not gonna hurt your credit score. It's not. But banks tell you otherwise because they don't want you to shop.
Yeah. Actually, that makes sense because I think that's one thing that folks are always worried about. Or even I tell folks like, listen, there's soft checks and hard checks. Like if they come to you, by all if they come to you, by all means, you're Gucci.
That's a soft
But
check.
if yeah, but if you're going to them
That's
like
a hard check.
constantly, it's a hard check. And I now that I know it's like 5 checks within 21
Mhm.
days.
Yeah, it's like 5 or 7. I don't
Yeah.
know exact number,
Mm.
but
But
I mean approximately.
approximately. Yes, yes,
And if
yes.
it's if credit checks hurts your credit score by 10% maximum,
Mm.
if you have a 700 score, then it may bounce down to 630. I
Yeah.
doubt it though, because if you have
630?
well 10%, right? If it
True, true,
represents
true,
10%
true.
of your score.
True, true, true,
But I
true.
never seen that. Only a couple of times I've seen it. I'm not gonna say I never. I've seen it a couple of times, but it's because the
Hmm.
client had bad credit history in the first place. They shouldn't be checking for new
Mm.
credit. They should be cleaning up what they have already.
Hmm.
unless they check once or twice for consolidation loan to consolidate. I get that part, but I'm saying if you're
Yes.
doing several credit checks and you have bad credit score already, what are you doing? Like, it's not making sense,
Yes. Yes. Yes.
right?
So we want to build it back up so it's be able to be healthier to get that
Yes,
mortgage.
right, right. That's exactly it. Now let's
Hmm.
go into the mortgage thing because you said you wanted to segue into that.
Yeah.
Obviously, the better credit score you have gives you opportunities to get you better
Hmm.
interest rates,
Mm.
which saves you money. Okay.
Okay.
So, example now, and as well, let's
Mhm.
get you more products. If you're looking, the example we just talked about a couple of
Yeah.
minutes ago in regards to buying a home with a minimum down payment, your credit
Mm-hmm.
score needs to be good to qualify for that. Because the
Okay.
only companies out there that qualifies for a mortgage, only way you could qualify for a mortgage with less than 20% down is through Canada Mortgage Housing Corporation. And your credit score has to be good enough to qualify for that. If your credit score is not good enough for that, then
Yeah.
you need 20% down of
Mm.
that purchase
Okay.
price,
Okay. Okay. Yep.
right?
Yeah. Ooh.
But now you're
Ooh.
looking at posted interest rates as opposed to discounted interest rates. So what are discounted rates right now? 4.9% approximately. If you go to discounted
Mm-hmm.
rates, you might be looking at 6.89%. So that could be an extra, depending on the size of the mortgage, maybe extra $1,000, $1,500 more a month, right? So your credit is very important. I tell people credit is like your spine,
Like your,
right?
that's
Think
a
about
good
it.
one. Ooh.
I could be
Yeah.
strong,
Yes.
but if I mess with my back, I'm not lifting up nothing.
That is
That's your credit.
very
That is your credit, right? You can have all the
very
money in the
true.
world,
Mm-hmm.
but if your credit no good, it'll be hard for you to find a proper
Mm.
mortgage.
Damn.
Okay.
That so okay. So making sure it's good, so your interest rate is reasonable enough to manage.
Yes.
Is there like let's say a difference between the 680 and let's say 750 with the
Yeah,
interest
there might
allegedly, like not allegedly.
no, no, no. Let's
Or
suppose. Let's see if there
yeah,
is.
yeah.
There's sometimes there is. Sometimes you get a discounted rate further,
Mm,
like a non-published discounted rate.
okay.
So it may not be published to the public. It may not be
Yeah.
published to the public, but some lenders I've seen that if your credit score is at 720, instead of the interest rate being 4.99, we'll give you 4.94. You know
Okay.
what I mean? Things like that. Very nominal, but something like that. Um, if your credit score is below 650 as a credit score and everything else pans out though, then
Mm,
you won't be able to maybe qualify for home equity line of credit because the home equity line of credit starts at 680 credit score, 680.
mm,
Okay. So
yeah.
that's the reason why you want to make sure your credit score is as good as possible so you can get the
Yeah.
best product as possible.
Yes.
Now if your credit score is at 500 and change, I'm throwing a lot of information here, but if your credit's at 500 and change, I say, because you just
Yeah.
finished bankruptcy,
Mm,
you can still get a mortgage actually with 20% down,
with 20%
with
down.
20% down. But
Okay.
now the interest rates are 6.8 as opposed to today, 4.9.
And up discount. Okay, so 680 score and up
Up.
equals discount rate.
Yes.
Okay.
Well, not only no,
Ooh,
680 and plus gives you discount rates as well access to home equity line of credits.
okay. Access to home equity credit.
Yes.
Okay, and then let's see if it'll do 680 and less.
You still can get a mortgage,
Mm-hmm.
but you probably won't qualify for home equity line of credit.
Okay. Um, but you don't get a discounted rate.
You still could get discounted rates.
Okay,
You still get
but
discounted rates.
not access to the home
Home
equity
equity line of
credit.
credit. That's
Okay.
correct.
Boom, bam, bam. See, that's all.
Yes.
We want the folks to
To see
see the
this.
difference.
Yes.
Uh, mm, sorry.
All right.
I was like, hold on. Oh, you want to be very difficult right now. Ah, there. Boom. Sorry.
Let me see what you got there.
Boom, bam, bam.
There you go.
I wanted it to be
Yes.
one line, two
All right.
lines, but such is
No, no,
life.
that's perfect. That's
Mm-hmm.
exactly it. Now, let's just add there now.
Mm-hmm.
A lot of banks, their minimum credit score they're looking for to be
Mm.
qualified at banks is around 630 and up.
Okay.
Okay, so your
Okay.
to get qualified at banks is around 630, give and take. Right? It's and the reason I say give and take, the people say, why give and take? Because if your down payment is very good, your income is very good, they'll give a what do you call it? I guess I'm losing my word. Exception if your credit score is at six as low as 630. That's what I
Mm.
say.
Minimum
Okay.
is 630. Boom.
But everything has to be around thing. So it's because there's an acronym I'm going to tell you guys right now that I came up with. Lenders
Mhm.
are cold as ice, right? They're cold as ice, and it stands for something.
Yes.
I
Lenders.
stands for income.
Mm-hmm.
C is for credit,
Hold
and
on. I gotta get this.
yeah,
Lenders
are cold
are
as ice.
cold as ice. Ice for income,
C is for credit,
credit.
and
Mm-hmm.
E is for equity.
Okay. Watch
Okay,
ya
you
bars.
need two, right? You need two out of those three things there to get a
Okay.
mortgage. So let's
Mm.
talk about that. What are those
Okay.
things?
Okay.
Suppose your income is not the best.
Mm-hmm.
You better make sure your credit is tight, very
Yes.
good, and your down payment, your equity is good, right?
Okay. Mm-hmm.
Because what happens is with the income and equity, you could put more money down,
True.
right, to
True.
qualify.
Mm-hmm.
Okay. If don't have good credit, like we just talked about, if you had good credit,
Mm-hmm.
if you notice your income has to be verifiable,
Yes.
strong, and your
Yes.
equity, your down payment has to be strong.
Mm-hmm.
Example now, the bankruptcy I told you guys.
Yes.
If your bankruptcy just discharged yesterday, you
Mm-hmm.
could get a mortgage today, but you
Mm-hmm.
gotta get 20% down at least.
That is-
See? So your income and your equity has to be tight if you don't have good credit.
Yes.
Now, suppose you don't have good equity. The minimum down payment, the example we talked about 750,000, the minimum down payment. You don't have good
Mm-hmm.
equity. You better make sure your income and your credit is
Credit is
tight.
on point.
So if you just think
Yeesh.
about lenders are as cold as ice, if you have
Yes.
all three, you know you're gravy. But
You're
you need at
like
least two out of those three
to
to
be
get a mortgage.
okay.
And whatever
So
you're missing, make sure the other two things are strong.
I'm glad you mentioned this because then there's once again folks that are going to be like, okay, so like the capacity before the
Income.
200K,
Hmm.
yeah. So at least if you have that equity there, you better come correct with the
Yes,
income or credit,
that's right.
so you'd be able to okay,
Right?
boom,
Makes sense,
got
right?
it,
Little things just to
yes, yes,
remember
yes, yes.
when you deal with mortgages,
Mm-hmm.
right?
Mm-hmm. Jeez. And for someone that wants to get into the industry, what is one advice or two advices you would provide for them?
Mm,
Because you know, like I'm pretty sure it's very funny that obviously with the mature individuals that are in as a mortgage agent or broker, there's the young folks
yes.
that want to join and they see the mature folks doing great things and they're like, I want to be this. And I'm not saying you're that person that they're looking up to. That
I
was
hope
not
so.
what I
That's a
said.
I hope so. I hope
Well,
that
yes,
doesn't
but
be
I
like
didn't
that.
want to call you,
Mature. Just call me mature. A mature person. I'm not the S word yet. I'm mature. I got you.
what's the advice that you could tell someone that's getting into that industry?
Um, you know what? You want to get with someone that you could shadow and lean on.
Mm-hmm.
Like I said, I came in from a different industry. I didn't come from a banking background like most mortgage brokers. I came
True.
from electronics background, something totally different. Totally different. And it's very rare you see mortgage brokers successful and be self-employed for this long in that arena, full time. So
Hey,
if I was supposed to go find a job right now, I don't know how to do it. It's been 21 years.
jeez,
Or I would have
jeez.
to find a job in the banking industry now. But um,
Mm-hmm.
so you want to make sure that you're with a team of people that has credibility and patience and time to work with you
Mm-hmm.
because you can lean off on their credibility. Like I
Yes.
said, when I first talked to my history, I worked with a company that had over my mentor and the two other people had over 60 years worth of mortgage experience between the three of them. So what I don't know, they know obviously. And I
Mm-hmm.
leaned on with people and letting them know this is who I work with, this work with, and I'll make them do a joint call with me if anything,
Yeah.
right? So you can lean on them. So you want to be with someone who's credible, been in the industry for so long, so you can shadow them and learn. That's
Mm.
one big thing right there. Okay.
And being coachable.
Yeah, that
Yeah.
definitely,
Yeah.
definitely, because people know you from when you're wiping your nose, blowing your nose. They know that person.
Mm.
They don't know you as a mortgage broker. So you want to leverage someone who's a mortgage broker and
True.
build that credibility. Now you're 2, 3 years in it, your
Mm-hmm.
credibility gets more stronger, right?
Nice. That's true.
Um, so that's a big thing. The next big thing, do you actually like people? You gotta like people. I'm telling you that right now. Because if you do not like them, you're gonna have a short, short, short career. So if you're not a people's person, don't do it.
So for the introverts,
Yes. I mean, you
stick.
could be an introvert. You could be an introvert and still like people. You gotta like people.
Yes, yes,
You know what I'm
yes.
saying? Because
Oh
some
man.
people don't like people. They're always negative. They're
Mm,
always put off by people. They don't
yeah.
have patience with people. You
Mm-hmm.
got to like people because people is your backlog. Someone could be listening to this right now and look me up and want to
Yeah.
give me a call. And do I
Mm-hmm.
answer? Hey, how you doing? Ted speaking. How may I help you? Or what you want? Do you like people? Do you like speaking to people?
Yeah.
Right? Do you want to
Yes.
help them out? It's not
Mm,
about the introvert or extrovert because sometimes I don't like going to social gatherings because I feel like I want to be an introvert. Not because I don't
mm,
like people, just that it takes a lot of energy.
yeah.
So I'm very good at one-on-one and small things. So I'm not going to talk about introvert or extrovert. I understand that energy sometimes.
Yes.
But do you
But
actually
like
like
the
people? Do you like
people.
having conversations? Do you like helping? You know, because if you
That's
don't,
very
people
important.
see it if you're there just for the money
Mm,
versus are you truly there to help,
yes. Yes. That that that's
right?
very true.
Because I
That's
ran in
very
some,
crucial.
I ran in some people who are
Hmm.
mortgage brokers or even accountants, whatever,
Yeah.
and they're very short. They have
Hmm.
no patience. That turns me off. It's like, yo, I'm gone somewhere else.
Mm. Cause yeah, cause and that's another aspect of like building a relationship. You once you get to understand the person and be able to, I understand how this person is.
Yes.
I can handle it. Boom. Let's go like this.
Let's go to
So
this personality. Sorry, like you're saying, like the star. We just talked about
yes,
star personality.
yes.
You have to understand some people are systematic. So when they're systematic, you got to do things systematic so they could understand and learn. If they're
Mm,
technical, be prepared to provide them all the information they want. Don't force them. They'll read it themselves and they'll come back to you.
yes.
That's technical.
Hmm.
Some people are action. I
Yes.
need it fast. Just don't worry about that. I trust you. Just action. Fast. Fast. Okay, cool. I got that. Some are
Yes.
relationship. They
Hmm.
want you to come to their house. They want you to go for coffee. They want to
Hmm.
smooth with you and talk about everything. That's relationship, right? So you have to understand.
Oh
You got to
man.
understand these different personalities you're dealing with it. So do you like people? Do you take the time to understand them?
Mm. That's one of the best things like I could think of
You
with that advice. Jeez. And let's see. I know I have to be mindful of time too with
Yes,
you.
there's a lot. We're gonna have to do this again. I'm enjoying this.
I
We gotta
do,
do this again.
right?
Yes, yes.
Because there's obviously so much like with you helping families. I want you to tell me a story that really inspired you when it came to helping a family, like with a family, individual, or even business that
Mhm.
were like, okay, this is why I do this.
Yes, yes.
Boom, bam, bam.
I have some just popping in my head right now. It's like you just have
Mhm.
names popping up. But
Yeah.
I'm thinking of this one individual,
Hmm.
and she was going through a divorce.
Mm.
Single mom now,
Hmm.
3 kids,
Mm.
and she didn't know how she did get this mortgage done because she's also self-employed. She doesn't show the general income.
Mm.
Um, and I was able to provide a product that would
Yes.
use bank statements to verify her income.
Okay.
All right.
Okay.
Now,
Mhm.
banks won't do this type of mortgage. They need employment letter, pay stub, T4s, T1 generals. They need to see some kind of income
Notice of
coming in,
assessment and
notice
all them
assessments, all that
things.
stuff. That she couldn't
Yeah.
provide that. She could provide notice assessment, but she doesn't
Yes.
show her income. She only shows like
Mm.
$15,000 a year, something like that. Something ridiculously low. But she had a home daycare, so she was making more than that. And
Okay.
I was able to use bank statements,
Mm-hmm.
character reference letters from the parents,
Nice. Oh, okay.
right, to
Okay.
show that's a viable business, right?
Yes.
So it was like like call it reference letters,
Yes. Yes.
and I was able to get her a mortgage just to be able to buy out her ex-husband and keep the
Mm.
home. And she will not take advice from no one. It's been
Yeah.
about 12 years now,
Yeah.
and no matter what people say to her, I heard this. Ted, is that true? Straight
Check.
up.
Well on.
No, that me I check
Man.
Ted, right? And it makes me feel good. And anyone who she knows that needs a mortgage, no, you have to call Ted. No, 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 stop what you're doing. Stop. Call Ted. So I can't tell you how much gifts I must have gave this woman to say thank
Mm.
you.
Oh,
Thank you. Her own son bought a house 5 years ago. I do that mortgage. And I'm doing the
yes.
renewal right now for him. And now he has two kids,
Mm.
just got
Yeah.
married. He has two kids.
Ooh.
Who's doing the insurance? Who's doing the education savings plan? That family's not going nowhere. No, no, no,
Yeah.
no, no. Stop what you're doing. No, no, no. Call Ted.
Because of the relationship you
The
built with them.
relationship. Yeah. Yeah.
Wow.
So it's beautiful. It's beautiful.
That that that's a great story because those are the ones that you make you feel good and just know that they put the trust in you and the whole family. And just like we said, like you're a family man that wants to have that financial well-being for the whole family.
That's right.
So you know every time Ted,
That's right.
Ted.
That's right. I'm gonna visualize that now every time. You know what I'm saying? Same way. Push up more than everything. That's exactly it, for sure.
Oh man! And also, what I used to, I no, what I usually like to ask folks is, what do they wish they knew about personal finance when they were younger? And I know
Mm,
you're still young.
you don't know.
I just,
Very young still. Let me just cover that up. Just very young. You know? At least mustache kind of, you know.
it's still young.
Still young.
But I think it's very important for folks to maybe three, and one from when you started working, because you learned from a very young age. But I'm pretty sure there's things you've learned throughout when you got your mortgage and then in between.
I like that. I like that.
Yeah.
I like that. So let's start from young, just
Hmm.
the pre-adult years, so to speak.
Hmm.
Um, if I could tell myself, my younger self, something that I know now from when I
Hmm.
was like 19 or 18 years old,
Hmm.
um, and I say 19, 18 because at that time, now you're considered an adult,
Hmm.
I would have already started putting money into a registered retirement savings plan.
Okay.
$25 a month, whatever it is.
Hmm.
I would have built
Hmm.
that habit that would have served me now because if I had a rule, if I knew, and another thing, okay, I'm going to give you two right now. I'm sorry, I'm going to give you two.
No,
To
no, no, do
do,
his thing.
so doing that right away, paying myself first before I do anything else, right? RRSP at 18 years old. Um, and I wish I knew about the rule of 72. That's the bottom line. If I understood that, I wouldn't have so much debt because the reason why I was working two jobs at one point is
Hmm.
because I had to pay off debt to buy my home.
Mm.
I'm gonna give you a little story here. If I knew about
Mm.
Rule of 72,
Yeah.
I went to, for the ones who are young like me, I would have went to Canadian Tire,
Hmm.
withdraw out $200 cash
Yeah.
so I could pay for my boys to go to Ocean 11, Studio 69 to party and drink. Big one, big one. Trust me. Okay.
Mm.
And by the time I turned 26, 27, I owe almost $50,000 worth of debt. I'm spilling the tea here. Okay. So I had to
Ooh.
pay that off, which I did.
Yeesh.
That's why I was working two
Yes.
jobs and bought
Yeah.
my home. But you understand? So pay myself first, rule of 72. If I
Yeah.
understood that,
Yes.
listen to me, man. Life would have been different. Life
So
would have been different.
I'm glad you mentioned that because to the younger folks, I get it because like when I was in my 20s, I didn't realize how important it was. Well, no, that's a lie. I always saved from time.
Oh, you see, you did better than me.
From
I save
time.
for an item. I save for that jacket. I save for that car. I save for that shoe. Hold on, Ebony Fashion Show. Ebony Fashion Show. I save for that tailored suit that I want to buy. Listen to me, man. I
Yes.
save for an item. I didn't save for retirement. That's what I'm talking about. Save for retirement. Let's
Yeah.
differentiate that.
True, true. That,
I
you know,
save for depreciating
mm,
value things. If I understood the difference, I wouldn't have done that. Listen to me. I had a car at 16 years old with 12 speakers in it, honeycomb rims, balling. Where's that car now? Money gone.
that's a that's a dagger to the folks when they're in high school and souped up them car and things. We're not dogging you,
Yeah,
but there's other assets that you could have received.
I'm
At the
telling you. Listen, if I
12
understood
speakers?
12 speakers, 12 speakers, 12. If I was one of those guys that if you hear me a block, you can hear me a block away. I was one of those guys. I'm sorry. And I wish I knew different. What I
Mhm.
should have done,
Yeah.
not realize how real estate is now. An average
Mm,
house real estate costs 900,000. What I should have done, I could have bought a flipping condo for like 80,000, 100,000 back then. So 5% down on 100,000 is only $5,000,
hey,
and then you could have rented out, or I can
hey.
live in it. That's what I'm saying. I guess that's the third. To understand how money works.
Yeah.
Period. Just
Hmm.
period. Understanding how money works.
And the one thing I enjoyed with this is that you gave your story to folks for them to understand
Yeah.
why you suggest things.
Yes.
Because sometimes, when it comes to you rather folks take in your experiences and vision what you went through, like the 15,000. Woo, jeez.
Yeah.
And able to pay that off. If someone was just at least one or two people were able to listen, like, you know what?
Yes.
I don't know if I want to do that.
I'm telling you. I think these younger folks are a little more informed because of social media. Right?
But
My daughter's
mm,
24, turning 25, and she's
yeah,
saving. You think that she'll like I tell her certain things, but she's learning a lot from social media. She asked me about it.
yeah,
So they're getting more informed right now with the social media they have. It's just
yeah,
the ones that don't really try to educate themselves and just take a blind eye and ignorant to it. Um,
exactly.
but you still, as much as I want to tell people though, as much as that you're getting information off the net and you're
Mm,
hearing us speak, still
mm,
speak to professional because there's so
hmm.
much nuances to the things that we just said that you may
Yeah,
not understand or be aware of, and
and you
that's why
just
you have
sit down
the
and digest it.
yeah, because that's where a professional comes. A professional makes sure you don't get hurt and reach your
Mm,
goal,
exactly.
right? So all those crypto people that thought they're gonna make millions of dollars, right? That's crypto. I'm not saying crypto's not good, but if you
Mm,
don't really truly understand it, I've seen people lost a lot of money in crypto. So you want to
that is
speak,
very
right?
true.
So you want to, you're on the social media, you're getting this information. Good, it
Mm,
opens your mind. Now seek professional help to make sure you do not get hurt and you're able to get where you need to go. Risk
don't,
management, right? Manage your
don't
risk.
jump into the first thing, exactly. Risk
Yeah.
management. Don't jump into the first thing when it comes to anything, whether it's crypto, stocks, real estate, anything, right?
Yes.
It's but that's how you live and learn.
Yes. Yes, indeed.
But
Yes, indeed.
it's better to learn before it actually happens because you don't want to get one with them type of
That's
things.
right. Right? Don't touch the stove, man. Don't touch the
Yeah,
stove.
those are hot.
Yes, it's hot. Right? It's hot.
And also, Ted, how what other avenues do you have in store? Because I see you more on Instagram, so I'm excited. I'm like, okay.
Yes, yes.
I see the information, I see the dancing, I see them all.
Yes. Well, I'm moving from being self-employed to businessman, a true entrepreneur.
Mm,
It's work in progress. I would
yes.
not leave the financial realm. I'm trying
Mhm.
to revolutionize the financial realm such a way now that when I'm sleeping, money's still being made.
Boom, bum, bum.
Okay, that's a big thing now. Passive income. I've been self-employed for 21 years,
Mm,
um, but I'm taking the time now to move it more to a business ship. So what does that mean? Building a team of individuals who works with me, having more investments that gives me passive income,
yep.
so I can build my pension for life when I retire. That's what's on my mind right now. So my avenue is the other avenues is basically just staying focused how I could be entrepreneurship, build entrepreneurship and build
Yeah.
passive income and just have a lifestyle. I don't want things no more. I've been through things. I want
Mm,
lifestyle. Like I would love to do more of this. Give back to the community, charity work, philanthropy work, all that kind of stuff. And to do those kind of things, you need to have money because when you're doing these things, not generally you're making money from it. You're just giving back. And this is what I would like to do more. So stay tuned, Camille. You're going to see a revolution happening over time.
hey,
I'm
I'm
working on it. You're a
excited.
part of it too because I love what you're doing too as well. I'm learning from you as well, Cam. So
Mhm.
I appreciate you, Camille, and this was fun. And we got it. Like I said, we had some conversations before this, and this is
I know.
might be some more conversations we need to do because there's more things we want to touch on, but we're not going to do that this session because I do got to
Don't
get going. You got
worry.
to get going. But
Yes, yes,
I
yes.
am looking forward to seeing you two or three in this setting. Not seeing
Yes.
you, I'll see you more, but doing this two or three more
Person,
times.
in
Yeah,
person, and like this.
that's
And
right.
how can the folks get a hold of you? Don't worry
Oh
about
my
all the
gosh.
information.
All right, all right. Listen, you can get a hold of me
Mm.
by just Googling my name. There's not too many black men out there named Ted Evans. That's one thing I love.
You're
So
lucky.
yeah,
You're lucky.
it's a true Anglo-Saxon name. I tell you, that name saved me a bunch. Actually, I want to tell you a story about that.
Yes, yes, yes. I
So
want to hear
I always back in the days when there's jobs available, these young ones don't have as much jobs available anymore. But in the younger days when there's jobs available,
it.
no, anytime I give myself a resume out there, I would
Yeah.
get an interview. But when they see me now, Ted Evans, you could come in now. I'm walking through. I used to have the hoop earrings. You remember the hoop earrings then? Walking through, they look upon the resume, they look upon me, they look upon the resume, they look upon me. This one person had the audacity to say, "You're the black Mr. Clean." Had the audacity. Black Mr. Clean.
Yeah.
I didn't get the job, obviously,
That's
because they thought I
wild.
was Anglo-Saxon, Ted Evans,
So now I have to put your.
right?
I'm gonna save your number.
So my name, I love my name to be honest with you. I didn't tell you my middle name.
Oh, is it a secret?
It's not a secret,
You
but
can let everyone
but
know.
it's a famous Anglo-Saxon name, very famous.
I
So
want to
when I
say Eddie, but
when I say what, please?
I wanted to say Eddie.
No, no, no.
No, Edward. Eddie.
I'm all shook up. Hmm.
Oh,
Yeah,
really?
yeah,
Elvis?
yeah.
Whoa!
Ted Elvis Evans. You can't get any more Anglo-Saxon than that. So
Cheese and
I
peas.
hated it when I was young. I love it now. I love when I was young. I hated it. I said, Dad, Mom, how the hell you name it that?
Me want you to get a nice job. Where
There
you
you go.
not? You're good.
There you go. There you go. There you go. Ted Elvis
Oh
Evans, girl.
gosh,
Yeah.
that is crazy. My God. Well, Ted, I, it was a pleasure, and we definitely are going to have a next thing.
Yes.
You're going to see Ted soon because there's things that we spoke about off offline. So I'm excited. I'm excited about that too.
Yes.
Because you killed it with the credit and the mortgage and everything. I'm glad that we were able to get a better. Well, I don't know about y'all, a better concept about the five C's because
Yes.
Get your credit right, y'all.
Get it right. It'll save you money. It'll save you money and open some more doors for you for sure.
Boom, bam, bam. And is there anything else you want to say to the folks before we head out?
You know what? This was a pleasure.
Mm,
And once again, I am looking forward to doing more in this area. We could talk more about mortgages later, about different type of mortgages and how you get approved for it. But I
yes.
just really wanted to speak about more or less how credit affects mortgages. But like I said, that could be another session. And yeah, please reach out to me. Reach out to Cam. She knows how to get a hold of me as well.
Yes, yes,
Plenty
yes.
of success to you. I love what you're doing. Once again, keep it going. It's inspirational. You're providing a lot of value out there and connecting a lot of different professionals to the
Yes.
community that people could learn from as well. So
Boom, bam, bam.
you're appreciated. You're
And
appreciated.
that
Thank you.
and that's how we do, right? But
Yes.
I just want to make sure that people like, you see,
Yes.
comment.
Yes. And
Gosh,
share.
share, subscribe to everything.
That's
All
right.
right, folks. And it is a gloomy day today, but
Yes.
the rain gone, so we're
I'm
gonna
going
enjoy.
golfing.
Go. You're gonna go off after
Oh
this?
yeah. Oh yeah. Oh
Okay,
yeah. I'm
by
going
all
golfing.
means. Well, I'm about to go to Red Lobster and things because y'all know.
Okay. Okay. You go do your thing, girl. Do
Yeah,
your
man,
thing.
I gotta treat my grandma, you know?
Beautiful.
But thank you so much, Ted. And folks,
So,
make sure you like, comment, subscribe, share, tell a friend to tell a friend, and check on your loved ones. All
yes.
right? And tell them how much you care and love them. All
Yes.
right? Till next time, folks. Hey. My Korean folks will like that one. Until next time, folks.
Peace.
All right.
I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution.